That's right. You're watching the next episode of Real Estate Chat. This one with
Robert Eid.
and Jonder Perez. Robert,
Yeah.
you know what we love about Real Estate Chat?
Well, is it the same thing as last time comments?
It's the same thing as a couple of episodes ago, and we love the chatter that our Real Estate Chat viewers are chatting about. So make sure you're subscribing to our channel and liking the videos. And we're going to load up these 3 comments here that are pretty interesting from the previous episode that we talked about 2 episodes ago now. And so this one is from Sophie, and she's saying, hopefully more rate hikes are coming to control inflation even more. Those who wanted to buy had plenty of opportunities to do so during recent years. So why are they complaining now? So I don't know. There's a lot of complaining apparently going on in the market with real estate non-haters, the real estate investors, the real estate buyers, those who have entered the market. Jeff O'Toole, 4509. So hopefully I am praying is that these last 2 rate hikes are forgotten by the zombie house buying public. Zombie house buying public. The realtors had better get out there and manhandle, I guess is what he's trying to say, more victims. I mean, clients to buy. If that can be true, we can show a brilliantly constructed rebound just in time for Tiff, the madman Macklem. His words, not ours, can come in and swat down the market like a bug on a windshield. A lot of symbolism, a lot of analogies being used. He has not disappointed to date. Realtors, do your part and sell. This is going to be awesome. Next comment is from Pradeep. While I understand your frustration with Bank of Canada, you have to recognize that macroeconomic predictions are very complex. If I am asked to choose between higher inflation and higher interest rates, I would always choose higher interest rates. While both impact Canadians, higher inflation has more adverse effects than higher interest rates over the long term. Thank you always for your real estate comments. Good, bad, ugly, doesn't matter. We love having that discussion going. And for those of you who are interacting with us, because you see the analysis that Robert does, the commentary that Robert and I do, reflecting what the real estate market is. This was an interesting episode because we talked about something pertaining to inflation, and that's what this episode is going to be about today too. And it's a cumulative effect. So I'm going to pull up Robert's charts here momentarily, but there are many valid points here. I mean, again, it's not about agreeing, disagreeing, but rather analyzing where these points are coming from and understanding the perspective of each and every single one of you watching this. And by all means, if you have a comment right now, make sure you include it in here. But Robert, the episode that we talked about where these comments came in, we talked about the interest rate hike, of course, which everybody knows about now. There's a couple of articles that are more current that we're going to be talking about in this episode. But I'm going to pull up the Bank of Canada chart here, Robert, and then we're going to go to your chart. So why don't you explain, for those who need a little bit of catching up, what recently happened and why this, not so high bump, this bump to 5%, what does it have to do when you tie it in with inflation? Let's start with Bank of Canada hike.
Okay, this is a very telling and very teaching chart because it goes back 20 years to 2000 and comes forward and it shows every single incremental change that was made in the interest rate. This is the Bank of Canada overnight lending rate. So in the first third of this chart, let's say the average is 3.75%, somewhere in there. So that was what was deemed normal. And then everything else, the interest rates for mortgages, because they're very secure, and for car payments and every other kind of lending was stacked on top of that. Then we had the global financial monetary breakdown crisis, and that was so terrible that they had to make the interest rates plummet down to 0.5. And then it seems to recover after a miracle year, and we came back up to 1%. And then down a little bit for more stimulation, because this is all the Bank of Canada, the wholly independent organization working hand in glove with the government of Canada to use interest rates to stimulate what they think needs stimulating to buoy up the economy at a time of softness. And so then they started working it back up, chicka, 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 Well, because they saw interest rates, they saw real estate was getting a little bit out of control. And they saw car prices going crazy and everything too. And they started moving it up until they got up to like, what is it, that 275 or something rather. And again, our interest rates then went up to like nearly 4. And then we had this low rate lockdown. And because of the lockdowns, regardless of what you think about the cause of the lockdown, we had the lockdown. They decided they were going to knock the interest rates down again to 0.25, 0.5. And there they were for a long time.
Very long
Not
time.
as long a time as what people thought. And then all of a sudden they realized that that was an error, that they should not have done that. And so they had to recover and go back up to where it was 20 years ago in a huge, big hurry. Now, how can an economy adjust that quickly? With great difficulty. So we got all kinds of people telling us all kinds of reasons of why this huge return to normal, 5% bank rate, has not had a devastating effect on the whole economy. And what they're talking about in small way, like we're talking about Mr. Desjardins, economists, Desjardins Credit Union's economists' opinions. And I think that's quite good in analyzing the things that are talked about and aren't talked about, are done and are not done. So this is maybe me talking too much about this, but this is a fiasco that you're looking at. It never should have gotten down below 1.5% ever, ever, ever. And every time it was a mistake. And now you're paying for it. Too low needs to be balanced out. Too high needs to be balanced out. And now we're trying to find a balance again.
Well, it's about finding the right answer, because if you go back to our comments, basically, we're not economists. Robert and I, we are licensed real estate practitioners in Ontario, and so that's basically our credential. We're not going to pretend we know better than Bank of Canada. We're also not going to say we know worse, or we're worse off than what the Bank of Canada can do. Everybody's entitled to their opinion, but basically, I mean, I guess what's this likened to is driving really fast for a very long time and then slamming the brake extra hard, and then all of a sudden, what happens? Right? What happens when you slam on the brake extra hard after such, flow of very cheap money? And investors were having basically an opportunistic moment, just as the previous comments that we talked about mentioned. So why should they complain now? Well, let's now link this to what inflation has been doing. And Robert, what many fail to realize when the article says, inflation has slowed to whatever 2% to 2 and whatever percent, what's inflation actually doing?
Well, it's the current 1 year or rolling 12-month change. Sometimes it's a 1-month change added on to the previous change from the rest of your life. And so that's why they zero it out every now and again, or they 100 it out, and then it moves up from there. So since 2018, we've seen 18% increase in inflation, which means your money buys 18% less. Now that's an average, and that's taking out some things and not counting other things and extra emphasis and weighting and all this stuff, the way they monkey around with the CPI. However, you're paying much more for butter than 18%. It doesn't show here the cost of gas. I'm a big one for pushing on the gas is at the root of a lot of this inflation. And it doesn't show the gouging that is added to prices when people say, well, I think we can get more for our widgets because everybody else is charging more for widgetettes. And so let's just charge more and whatever the traffic will bear. So it's a big monkey business of trying to put statistics out to keep everybody calm, and then they send out money. Oh, we're going to increase. We're going to double the climate change bonus. We're going to double the CPO, whatever you call it, Indigenous low rent poor people. Sorry to hear that you're having a tough time benefit, and they just send out money. And where do they get the money from? Not from taxation, because they're running a deficit, so they have to just create it.
Yeah, so the gist of it is you're not going to be paying 2018 prices for your bread. That's not going to happen. So when you see inflation slow down and the media is making such a big fuss out of it, it doesn't mean that the bread that costs $2-3 today went down by 2% or whatever it is. Like math-wise, you can do that calculation. You're not paying yesterday's prices for anything. Everything that has gone up even when there's a sale, it's not going to go down to like 99 cents a loaf anymore, right? And that's sort of the reality of things. Robert, in the 1990s, how much was a loaf of bread selling for?
A loaf of bread, I don't even know. I can't remember back then. I have a hard enough time remembering what the price of something was in 2001. The key ingredient here is to remember that inflation measures the decrease in the purchasing power of the dollar. It's not the increase in the thing.
No, exactly. And at the same time, however, you're not paying less because inflation, the rate of the increase of inflation has gone down, doesn't mean you're paying less. It just means the erosion
of plus 3% on top of the 15% on top of the 4% on top of the 2%.
Essentially, the erosion of the value of your money has decreased its pace. Doesn't mean you're going to pay less. So it's got to be very clear. Now, you shared a couple of things with me here, and they're all linked together in one way or the other. So Financial Post haste, one of Robert's favorite emails to receive, because there's a lot of information you can glean from this, talks about Bank of Canada's latest interest rate hike, and it ties into an interesting survey from the Angus Reid, which we're going to talk about as well, because we love these surveys, right, Robert? We always love looking at what people think about it and the methodology. We're going to talk about that in a moment. But again, for the sake of time, we're going to link these, all of these in here. But Robert, what's the one takeaway you have, or a couple of takeaways you want to talk about here with this Angus Reid? Because apparently, according to the title, I mean, there's obviously more stats, but the title says 3 in 5 Canadians say latest increase to Bank of Canada rate will further hurt finances. But then they talk about how significant, right? And they talk about, for example, half of Canadians say grocery costs are difficult to endure. In the next 6 months, what kind of impact will higher interest rates? Well, a significant negative impact, says 34% of the Canadians who formed this picture of what this survey is about. Mind you, there's only 1,600 of them, and how they were selected. We're going to talk about that in a bit. So read through the survey. The link is in the description. Make sure you click like and subscribe if you like what you're seeing so far. Robert, what did you take away from this?
Okay, number one, polling is a way of gauging whether it's time to do what you want to do already. This is government policy. Whether you think it's time to introduce pretend currency, or whether you think it's time to put in an annual guaranteed basic income, whether it's ready or not. Now, the questions that the pollster asks are very important. For example, if I ask everybody in this audience, would you like to get more money for free with absolutely no ramifications, or are you willing to take the ramifications for the free money that's given you? Everybody's going to answer, no, I'd rather have no ramifications. Why? Because it's in your self-interest. It's a stupid question, but you can put together a great result on that makes a great headline. Now, is Angus Reid a pollster? Yes. What is a pollster? A pollster is someone who selects what they'd like to have the outcome be, and then finds people to give answers that agree with that. Now, if they can't find anybody, then they find other people. So if we come down to the methodology, okay, here's the 1,600. Angus Reid has a pool, a randomized sample of 1,600 Canadian adults who are a member of Angus Reid forums. They volunteered to go in it, and then they participated a few times. So they've been able to narrow it down. For comparison purposes, only a probability sample of 1,600 would carry a margin of error plus minus 2% 19 times out of 20, which is how polls are recognized. If you have 1,000, it's about 3%. But this is a cooked up poll from their own people. Discrepancies in and between the totals due to around themselves was self-commissioned and paid for. So nobody asked them to do it, and they paid for it themselves from their own people using their own questions, and then they published a result of how they wanted it to be presented. So I would say that this represents the public policy opinion of whoever paid Angus Reid to be in business and nothing else. But it makes a great headline. Instead of people saying, I'm able to tough it out, a third of people are able to tough it out. A third of people think it's no problem. And a third of people think it's the best time they've ever lived. Now we've got half of them saying it's terrible.
You know what the interesting part is when you actually click on the, like, where they derive their results from, for example, age, gender, region.
Yeah, well, that's good. Oh, I'm glad they have that.
So watch when you're looking at the 1,600 sample size, and a third are renters, 2/3 are owners.
Yeah.
Right. So you got to keep in mind that, again, we're not statisticians. We're not.
Well, what are the other? What do you think the others are?
But you have to have a license to be able to run polls, or
Well,
is
they're
it,
kids.
can anybody just run run these polls? But think about
That's
it.
right.
So
You don't have to have a license.
so methodology wise, if you did 100% homeowners, that survey result would look different for all of these categories of questions: groceries,
Correct.
purchases, and all that.
Correct.
And renters, I'd like to say, because obviously, not to say that renting as a category, owner one category is better than the other, but it's because of the mindset that's involved in, you have a huge mortgage. So if you're renting and you don't have as big of a commitment, maybe a major purchase might be easier to make than if you had a mortgage, your rates have gone up, and you've got a major purchase to make. Right. So there's a lot of different methodologies. And so at the end of the day, we rely on these articles from the media. Well, not rely, but I guess we get entertained, or we get edutained by these articles from the media, not really thinking about what's underlying there. Remember, 1,600 Canadians. I didn't know I could be a part of this Angus.
You can't be.
Forum.
It's closed. The forum is closed. They solicited people for that 5 years ago. Now it's closed.
There you go. Right. So I can't be a part of it. I can't express what I feel. Robert can't express what I don't think Robert's part.
Polling used to be where they would telephone.
Random.
Out of the phone book, but now people don't answer their phone anymore. If you get an 1-800, I don't know that, you don't even answer. So they don't want to do that anymore. They have polls on the internet where you can volunteer to voice your opinion.
Exactly. So jumping from the rates and the comments that we receive now to inflation, now to how people feel about it,
yep.
There's got to be some sort of a solution. And if you're watching this episode, if you have a solution, type it into the chat. Everybody's entitled to their opinion, just like everybody's entitled to publish what they did on a poll, right? Yep. And what they found on that, right? But let's look at what Robert shared as Desjardins provided solution to this problem, or proposed solution. With the interest rate hikes, what is Desjardins saying, Robert, as to how inflation can be curbed, and what can the government do about it?
Okay, well, that's a good introduction. Are there other ways to lower inflation besides continuing to raise interest rates? Great headline. It's a clickbaiter. And so what does he say? Yes, there are, except they're no good. So go through, and he's got graph 4, and it really shows a lot of interest rates, stock markets, pandemic, supportive spending. Government can increase stimulation to demand. Government can introduce higher taxes. Government can try and stimulate supply by reducing taxes. Things are, subject to influences from around the globe. Better coordination between central bank and government coordination. Well, we touched on that a little bit before. They are supposed to be separate, but they're not. One tells the other what they're going to do, and the other one says, don't do that because it's screwing up what we're trying to do. And in addition, additional measures to stimulate supply over the long term were to require a sharp short-term increase in spending and investment. It could push inflation higher before it eventually falls. So the upshot of this is, no matter what you do, if you try and manage an economy, you will probably make mistakes. If you try and stimulate the cities, you will probably screw up the rural. If you try and do the opposite, if you try and appeal to certain segments of the economy rather than the whole, you will stimulate some. You'll pick winners and you'll pick losers, and the losers, if you're part of the losers, you can't do a darn thing about it. So what does the article say? The article says, after considering all the options, we don't know.
It seems to be everybody's answer, right? It's just like very vague. I mean, everybody can put commentaries in there. And again, Robert and I are not here to per se propose answers. We're here to talk about opinions, ours, yours, and to see where all of this is going. All we can describe is basically from the initial comments that were made. Everybody's entitled to their opinions about whether the Bank of Canada should continue to increase rates, shake down those the zombie buying public who devoured all of this real estate and now they're suffering. What are they complaining about? They had it good for so long. That's pretty much what we're hearing through the comments, through anybody talking about these things. But you've got to consider too that all of these things that have existed since the Toronto Regional Real Estate Board has started doing stats and tracking these prices since the 1970s or even late 60s. up until now, real estate is tied to inflation, right? It's an inflationary thing, which means that if you buy today, Robert, would it be fair to say that 20 years from now, provided everything in Canada continues, so you kind of have to bet on your country doing well and your province doing well and your city doing well. But wouldn't it be fair to say that if I bought in today's tough, challenging 6-7% interest rate time, a $1.5 million detached home, it should be worth a lot more in 20 years from now?
Well, if the target is 2% inflation is a winner, that means that it goes up 25%. The value of everything goes up 25% in about 11 and a half years. So yes, they're telling you that inflation is going to be a part of your life. The value of your money is going to go down. And so the value of any tangible asset that you hold will go up, except for gold and silver, because they're middling with that. They're fiddling with that. But yes, if you live in any house for 20 years, you will make, it'll be the smartest thing that you ever did. And everybody knows that, because 50 years ago, you lived there for 25 years, you paid off the mortgage, and then you sold the house and you lived on the money.
Exactly.
So yes, to answer your question, yes, of course.
So it's not really rocket science, and it's not a matter if, when, well, if it's not a matter of if, it's a matter of when, right? And so
time is money and money is time.
Exactly. So there you go. If you want to be a real estate zombie, you know what to do about it. But if you want to be practical about it, remember, if you're, and you do your thing. That's what we've always promoted. Do what's right for you. If you're renting, you love the flexibility of it. You like to do other things with your money. You like to save. You like to invest in the stock market. That's up to you. If you are in the home ownership, as long as you're not over leveraging yourself and you're maintaining those payments and you're living comfortably, you're not overextending yourself. That's the most important thing. Then keep doing that. But real estate prices will go up, not because we are real estate geniuses, but that's just the way things have been structured with inflation, with rates, with tangible assets, with supply demand, with immigration. All of these things come into play to ensure that these prices will go up. Unless something changes in Toronto, in Ontario, in Canada, that's just the way it's going to be. And the rate of that depends on what's going on with the government, with the economy, with lifestyles and all of that sort of stuff, with demographics, with immigration, right? And just if it is, I mean, we talked a couple of episodes ago before about housing starts, immigration, the rate of immigration, this will be an entire episode in itself. The rate of immigration, the supply of homes being built is not keeping up, right? And so we've got various different solutions that the governments and politicians, and real estate people are trying to put together. But to Robert's point, any of these articles, reports, who really knows what's going on? Until you try something, it fails. Try something else, it fails. But what's really good is that you're watching our real estate chat. Make sure you like, subscribe. Make sure you put your comments in, because one day your comment might be featured. Thanks for watching, and we'll see you in our next episode. Bye for now.
See you later. Bye for now.